Coin, Dogecoin, Litecoin, it can feel like learning a new language trying to keep up, but is it worth becoming familiar? These cryptocurrencies now worth nearly $2 trillion. Financial professional Stewart Fields from Open Air is here with us this morning to talk about these cryptocurrencies and everything you need to know. Stewart, good morning. First question, what exactly is cryptocurrency?
Great question, Terrence. So a cryptocurrency is actually created by a series of computers, and these computers are solving complex problems, and this process is called mining. And once these cryptocurrencies are formed, they're actually like any other investments. You can buy them, you can sell them for profits and for losses. So it's really a complex solution that's creating these cryptocurrencies. You may have heard of these in the past, the biggest one being Bitcoin, Ethereum, and in fact, Dogecoin, which hit the market pretty aggressively last year, was actually created by a joke. So these do come with a lot of risk. They're unregulated. So when you're looking at these types of things, just about anybody can create a cryptocurrency. So it's very important if you have questions or you're thinking about investing in these to ask the right questions, talk to the right people.
Yeah, and I love that Dogecoin was based off of a joke. Every time I hear that story, I just chuckle because look at where it's gone now.
Yeah, I mean, exactly. It's one of those meme stocks. So you have to be very careful this day and age. You're seeing these get-rich schemes pop up all over the place. So if you're seeing these things, and like you said, if your mom's told you if it sounds too good to be true, it usually is. So you have to do your research and make sure that you're looking at the plan from a very holistic approach before you jump too deep into this cryptocurrency markets.
And what sorts of things should people know before they start investing?
Well, first of all types of investments carry some risk, and cryptocurrency is no different. In fact, it probably carries substantially higher risk because it's very unstable. The prices are very volatile. If we look at the price of Bitcoin last year alone, we saw prices from $27,000 all the way up to $67,000. In fact, we saw changes in daily prices of around 15%. So these are huge swings. So definitely know your risk tolerance, know how much you can afford to lose. When you're setting up your retirement plan, I hate calling things play money, but this type of investment needs to be separated from your retirement accounts because of the instability. When you're working with a financial advisor, we have a lot of tools that can analyze different investments. Cryptocurrency is a different world. There's no fundamental analysis we can do that. There's no physical asset. So it's a whole new ballgame when it comes to that. So the best advice is if you are dipping your toes in this market, keep it separated from your investment portfolios.
Any general advice for investors?
Well, really, because it's unstable, because it's basically government lacks control, you have to be, like I said, just know your plan, know what you can really lose, and be careful out there because we were talking about Dogecoin, and anybody with a computer and with the know-how can create these cryptocurrencies. So they're not all created equally. So if you're looking at these, be careful what you invest in and basically make sure that you're talking to an expert, you're doing your research when you're looking at cryptocurrencies and really see how that fits into your overall plan.
And you say make sure that you're only using as much money as you're prepared to lose.
Well, there's kind of a three-step approach I want to take when you're looking at cryptocurrencies for your investment portfolio. The first thing to do is, as you get older, you want to dial back your risk. And first of all, you have to have a plan. Where are you in your plan? And as you get older, what you want to do is dial back your risk, because if you're 62 years old and you want to retire in 3 years, if you see this big change in the market, that could force you to work 4 or 5 plus more years. So as you get older, make sure you're dialing back your risk, know your plan to make sure that you're achieving your goals. The second thing is have a purpose. The last couple of years, we've seen some good returns. Last year, the market returned over 27%. However, a lot of that growth is in just a particular area of the market. So your investment approach you did 5-10 years ago isn't exactly working anymore. So you have to have a focused approach, very, very specific at what you're doing in your portfolio. And third is create a plan. You need to create a plan that basically for good times, bad times, and maybe normal times. Because what we're seeing today, because of the geopolitical events, is our markets are very volatile. And if you don't have a plan when those events pop up, most of the time you're going to make not the strongest decision. So if you already have a predetermined plan, you know what you're going to do. Once that event happens, we're going to evaluate and adjust as needed, but you have to have a written plan to make sure that you're on the right track. And that's what we really do here at Open Air Advisors.
Stewart, we thank you for enlightening us this morning. And if you need to go over this information again, we'll have it streaming for you on our website, fox4news.com.